Hello.
Hey,
What's going on?
hello, can you hear me?
Yeah, can you hear me? Technical difficulties.
You
Wonder
know,
where.
it goes back. It's like my
Hmm?
favorite scene. One of my favorite scenes of Silicon Valley. You watched Silicon Valley, right?
Of course.
So there's like that scene early, like in the first couple seasons, where like Gavin, he's like, "Let's use the Hooli hologram to have a conference call." And it
Yeah.
doesn't work. It's like, "Oh, let's use like Hooli chat," and they're like, "Oh, Hooli chat doesn't work," and then they're like, "Call him." I'm like, "On what?" Like, phone.
Hello, barbarians, and welcome to the ninth episode of the LLB podcast, Low Level Barbarians from Asia on Asia, with debate and discussion on trending topics. With us, myself, Alex, typically your host of VOA, man at the high ground, Dave Chang,
Happy Sunday, everyone.
Jianggan, the information superconnector. How are you, Jianggan?
Hello.
And Andrew G, the master debater in Mexico now.
Hola, everyone.
Hola.
What are you doing in Mexico?
I am continuing this never-ending trip. Basically, I couldn't come back to Malaysia because I couldn't get my quarantine.
Couldn't come back.
Couldn't come back. So I decided to spend Christmas and New Year's in Costa Rica. And then, the weather was great, so I stayed there for a couple more weeks. And then now I decided to come up to Mexico, and now I'm here. I'm in a small town called Ciudad Valles, next to this river called Huateca Potosina. It's gorgeous. There's this blue river here. So working in the mornings and hiking in the afternoons.
No, I think that's the perfect segue. So the first topic we have was New Year personal and professional plans for the barbarians. And so I guess, Andrew, why don't you start, since you're continuing your journey? What is the plan do you have for 2022?
To not have a plan.
It's a good plan.
No tienes plano.
What's that? Say that again, Jagan?
No tienes bueno.
Plano.
Yeah, it's cool. I mean, to be honest, without getting too technical, I think for me it's balancing work and play. So this year is 50% intellectual stimulation, 50% cool adventures. I'm actually very fascinated by the future of work. I've been working with organizations that are fully remote and seeing how they're running organizations. And I'm starting to see what the future could look like. So basically, Costa Rica is full of digital nomads. I stayed in a bunch of places with great Wi-Fi, with people who've been doing this lifestyle for a couple of years and starting to understand the tools they use, the way they organize across countries, and it's absolutely fascinating, right? So I used to be a firm believer that synchronous office-based comms is the best way to do it. Now I'm starting to believe in like lengthy documentation, asynchronous communications, and the way these companies run fully remote organizations. So this year is my experiment to understand how do you build a world-class fully remote organization, starting with me.
Yeah, but there hasn't been like a new trend though, right? Like this kind of nomad thing's been going on for a long time. And is there anything new or different that you're seeing specifically that's changed, or?
I think the volume of people doing it post-pandemic has changed. So I'll give you an example, right? There's a startup in LATAM called Selena that's applying for, like, trying to get a SPAC right now. They have 140 hostels with co-working spaces and gyms attached to them. And so it's like we work on steroids for people who live in hostels and want to be digital nomads. But in this case, like, no ridiculous, crazy valuation. It's actually kind of justified, and they've built this whole base around that, right? And then you have interesting tools that are being developed. Like, I mean, there are these tools that a lot of people like. High Five, which is a people management tool. Or Notion, which people use for notes, but a lot of organizations are using it as a way to replace communication. Just observing how they use these tools and how it's moving into a new way of using them is a result of companies having been forced to be remote for a while, right? And as a result of being forced to be remote, I think they've accepted that this could happen perpetually. And it's actually cheaper if you don't have to have fancy offices. Number one. Number two, you don't have to pay so much. Number two, you get to hire from a wide range of countries and basically increase your talent pool. And all you need to do is have the right kind of tools and support there. So I think what I'm realizing, at least in the last few months of travel, is that this is becoming an accepted form of hiring, an accepted form of running organizations. And the SaaS tools to support that kind of structure and organization is we're just at the beginning. Like I've been using a tool called Miro that does whiteboarding, and then like tools that people used to do for like UX and design are starting to be readapted so that you can have these wide fields and be able to move between like pictograms and mind maps. So the rejigging, reutilization of traditional tools, or not traditional, but like other B2B SaaS tools, and just general acceptance. Like Google is saying that they're going to be remote for a while. Apple says they're going to be remote for a while longer in the US. So people are just going to use their lifestyle. In the US, you're seeing people move out. Like I met a lot of people that I knew from the Bay Area who now live in the north, in Wine Valley now, or who are moving to Jackson Hole or places close to adventure. So I think that the tools to support that, the kind of infrastructure to support them in terms of more and more places with better Wi-Fi, cheaper flights, more subscription-based services for gyms and co-working spaces, like you'll see those things increase.
Yeah. Do you guys think that this trend is going to stick, or as I think we are getting to the endemic phase of COVID, right, where it's just people are tired of it, they're moving forward. Do you think there's just going to be this big resurgence back to offline retail and back to the office, or do you guys really think this is going to be something permanent?
I think it's going to stick, but I'm biased.
Yeah, I think offline retail versus office work are separate topics, right? If you look at sort of like, I mean, to address retail real quickly, I think if you look at the genesis or the trajectory of where physical retail is going, I think more and more retailers are starting to adopt the Apple strategy that they adopted like 20 years ago. So if you think about the Apple stores, they're essentially, they sell things, but their real purpose is, I guess, branding and customer experience center. Right. Yeah. And I think that's still very, very important. Especially, I think we talked about it a couple weeks ago, is like, as there's more and more online retail coming online, acquisition becomes more expensive. And so at some point, it just makes more economic sense to build a retail store to acquire customers than to spend more money on Google and Facebook ads. So I think offline retail will come back, and there will be things people would like to browse, like to shop, and like talk to people, and they like to have some touch and feel of a product, right? In terms of like work, I agree with Andrew. I think we've reached the point where I think critical mass of people have been doing remote work long enough that it's just entered the zeitgeist and the expectations of employers, right? And people are trying to compete for global talent. This is something that is sort of a baseline expectation that people have. I think employers will by default be forced to allow some sort of flexible, fully remote, or some sort of hybrid solution. So I think that's been one of the nice secondary effects of that pandemic, that we've forced companies to accelerate the work from home timeline, like probably 10 to 20 years faster than they would have normally.
Are you seeing that trend, because you've invested in the recruiting business? Are you seeing that trend when you're looking for recruiting, that it's global now? It doesn't matter where they're based, especially for these big guys, right? You recruit for very big firms.
Yeah, so recruiting's a bit. So that firm, what it does is it's pure technical recruitment. So it only focuses on like developers, CTOs, product managers, and that class of people has always been very remote. Yeah, because there's such high demand, and there's so much fluidity and like how they can move across companies and ecosystems, that they've always been probably the easiest profession to do remote work or remote, right? But I think what we're seeing now is it's become more accepted for people outside of that profession, so for like accountants, for finance people, for lawyers, for BD people. I think the big one is BD salespeople, right? I think people have realized that you can do BD sales remotely. It's, as opposed to spending like, I don't know, whatever, $3,000 buying someone business class ticket to go to London and see a client. Right? You're not going to, it's of course, you can't get like 100% efficiency. It's not always going to be as effective as that. But if you can get like 80 to 90% of the same effectiveness by doing a Zoom call, and I think we've proven that over the last 2 years, and people are starting to say, oh, yeah, you don't need to do this, right? So I think the actually more interesting question is, what's going to happen to business travel and business class? People don't buy as good plane tickets anymore.
That's a good point. That's a good point. Before we dive deeper into that, Jianggan, does anything about Momentum works? Thinking about remote, or do you agree with Andrew's new adoption of his new lifestyle? Do you support him? You're doing it for your company?
I think the first thing that I want to do whenever it becomes feasible is to bring everyone together at least for a week. Even before the pandemic, we had a team dispersed through a number of countries. And that was not a problem because first you need boots on the ground, and the second that people can meet. I mean, you can jump on in Southeast Asia, you can jump on a flight and in the morning and arrive for lunch. So for most of the capitals, so that was not a problem. And I think when the pandemic first kicked in, was not a problem for us as well. So because people have been working in their respective countries anyway, and I think the only challenge is that some people forced out of the office, that they had to work from home. That was kind of change that took some of us, a bit of time to adjust to. But I think the 2 years in, when some of the team members have not met for 2 years, there is a sense of awareness. I'm not saying that in the future everyone should be in the office permanently, but having that flexibility, that ability to meet once in a while, because a lot of times what we do requires quite a bit of thinking and quite a bit of collaboration. Of course, we'll be using all the tools, but sometimes, having a group of people sitting in front of a whiteboard without distraction, with all your phones kept outside for 2 hours, it does wonders. So this is something that I'm hoping to replicate this year. So things are becoming easier. I think end of last year, some people are traveling. Some countries have opened up in a bilateral way in Southeast Asia. We still haven't got to a point where, we do have team in Malaysia, we do have team in Indonesia, we do have team in China. We have not got to the point where everybody can come together to one place and spend a week productively together. So that's something that I'm hoping to do, and I do believe that the future will be hybrid, because on one hand you are used to working remote. On the other hand, sometimes you do need to come together. So having that flexibility will be good. I'm not sure how things will exactly pan out when things seemingly go back to normal, where you can just travel as you used to. Will people still keep the hybrid way, or will people just naturally gravitate towards one end, which is going back to office? I'm not sure. I can't predict that.
Okay. Well, then what about your personal plans for 2022? What is Momentum Works looking at? What are your personal plans professionally?
I would say that on one hand, I was grateful that for the past 3 years we didn't get much time to travel. That gave us crucial time to reflect, to get clarity about what we do. And there are a few things that we're doing before the pandemic: the ventures we're building, the consulting projects we're running, the insights we're publishing. But I think we're not doing many of this systematically. So 2021 was a year of clarity, where we get ourselves more organized, where we put revenue streams into proper business units with people heading each of them. So 2022, I would say that it's a year for us to scale. But of course, we're all experienced entrepreneurs. We know that you can't really scale without being careful, right? It's very easy to get into the grind and get off track. So that's something that I'm trying to do. 2022, scale, but keep things intact.
Okay. Then what about for you, Dave? Any specific goals? Acquiring more assets, properties.
Yeah, I guess professionally, one goes, I would like to unwind some of my private positions this year, if at all possible, free up some liquidity to deploy into new positions. I know it's a bit big, but I think what I've realized over the last couple of years is, having to deploy the capital makes you do work, right? And you really want to get into like an industry and putting some table stakes down or some money down. It forces you to learn how to deeper and understand on more fundamental level than you would if you were just being superficial about it, right? Correct. So there are a couple of sectors that I do want to have a little bit more understanding in. So I think biotech and life sciences is something that I would really like to explore this year. So ideally, like I said, unwind some positions, grow some of the current portfolio to be cash flow positive at least, and then potentially start looking into biosciences to put some capital there. So start doing some deals, start talking to people, and learning more about the space.
You want to do biotech and life sciences to extend your immortality goals, essentially.
Yeah, that's actually exactly what it is. It's all self-motivated, right? But yes,
yeah. Okay. And I guess for myself professionally, last year was when I first started doing angel investing. I did 2 deals. So I think I want to look at somehow to professionalize more of this, maybe do 1 or 2 more deals this year as well. I'm not sure how that looks like, it's either through more syndication. So the one startup I did help syndicate some decent money into, Jianggan and Andrew invested as well. That's a specific, that's along the lines of future of work as well, but in the crypto space. So, whether that's syndication, whether that's raising outside money, I think that's something interesting to look at. More importantly, I found this very interesting rubric from reading this book called The Happiness Equation, where they kind of have a framework for prioritization and creating space. So on the y-axis, if you imagine 4 squares, I'll pop this on the screen for the viewers, but for people listening, right, just imagine a y-axis is thinking and the x-axis is doing. So in the top right quadrant is high thinking and high doing, is when you use typically like what Jianggan's talking about, you're burning a lot, right? You're thinking and strategizing and you're executing really hard. Then on the below that, on the bottom right, is high doing but low thinking. That's just automated kind of stuff. You just do with it, right? And then low thinking, low doing is kind of like creating a lot of space, right? So I think for me, the past since I stopped working 2020 till now, there's a lot of space has been created. Maybe too much space. So I've been doing some doing in media and podcasting and some investing, right? But so the other top left quadrant is high thinking and low doing, which is when you really try to find that clarity. So I think it's like Dave, zooming in, finding clarity of how to formalize all this, to think about proper business models, especially with a lot of turmoil going on. You want to make sure that whatever you're deploying capital investing, you want to have that clarity to make sure it's something, one, you care about, it's not a fad or a trend, and that you can work, even if you're not getting paid, you're happy to keep doing it. And then, it creates long-term value that compounds over time. So I'm kind of trying to formalize, what I've been doing in the media space, creating content, investing. And I think it's not going to look like anything we've seen in the past. I think people tend to put you in the bucket. Oh, you have to be a VC or you have to do this. But a lot of the hybrid models I've been seeing are very interesting, where they've created revenue streams and then they became a VC so that they actually have real add value. Or they look for companies kind of like a Berkshire, where it's you have your default alive, default dead, and they use cash flow to then invest, right? So there's more of these hybrids, that I'm thinking about to kind of build up from there. But I still need more clarity. You really want to have that clarity before you execute, and then even if it's wrong, so at least you know how to pivot away. And just formalizing all those things for the past 2 years, it's kind of been like on a journey I've been on and trying to figure that out. So then materializing it this year in a physical form, an actual entity, see who I want to work with, maybe get more capital and deploy it. So yeah, that's kind of what I'm looking at. And anything else for this section, guys?
Can I add something? I like the word clarity, because that's something that for the past whole year I've been thinking about. And the funny thing is that every 2 or 3 months I would go back to the document which I thought I would have some clarity, which I compiled like 2 or 3 months before, and then reflect back and said, okay, now after I don't know, 2 or 3 months, I have better clarity compared to 2 or 3 months ago. So it's always ongoing, evolving process, and it actually makes me feel more at ease with myself with the things I'm doing, because I think we are all running our own thing in one way or another. And we're all responsible for what we're doing, as well as the people who are following us. So spending enough time to think, to get clarity, to also be at ease yourself. Finding the right direction will give you the confidence to launch yourself next. People have been asking me for years that, okay, what is momentum works? And what I've been telling them is the venture outfield, because I can't really put that into a bucket. We're not really an investor. We're not really an accelerator. We're not really a consulting firm. But I think within the team, we're getting better and better clarity about what we're doing. Precisely as you said, Alex, is something which is different from what is out there in the market, and whether that will work, I don't know. But at least I think now we have the clarity, and the team is aligned. So that's the best thing.
Great. Anything else to add for this section, guys? Goals? Anything else? No.
Eat more crab.
Eat more crab.
Yeah.
Yes. Also, we all have to meet together. Probably, I think that's what we have to do.
Yes. I think that's a good goal. We should all try and meet up somewhere.
Yeah. We should all meet together and do a trip. Like you said, Jianggan, meeting for a while is important, right?
It is.
Yeah. Okay, so I guess we can move on to the next section. This is more for Jianggan. Jianggan loves, since Momentum works in the business of media, they love to do predictions. They always go back and check. I am correct here, right? So,
it's such a bad thing, Jianggan, because if you're right, it looks really obvious in hindsight. But then otherwise, if you're wrong, it also looks really stupid. It's like a no-win.
Yeah. So why don't we start off with Jianggan? What is your outlook?
It's about phrasing it really broadly, Dave. It's about
correct.
Really
exactly.
That's the problem. If you phrase it too broadly, it just becomes a truism, right? But if you get too specific, you're like never going to be right. Anyway,
well, last year, I mean, we've been doing these predictions at the beginning of every year since I think 2018. So some of the predictions are, pretty specific, but I guess half of them are sort of sector focused, which might be a bit vague. So some of the historical specific predictions that we got was, I think a few years ago we're saying that Gojek now is going to expand outside Indonesia. It's not going to be, it's going to be slow. It's not going to be smooth. And last year we did this very, very specific prediction saying that C's market capitalization would double to 200 billion. And it did for about 2 or 3 days in October.
Still correct.
They very, very quickly half 2 months afterwards. And we're saying that, shall we conclude that, we were right on this prediction? And then we look at the wording and said, we're actually right. Indeed, 200 billion. But of course, predicting the secondary market is very, very hard. Historically, so many people have been doing, especially for the short run. So we thought it as not as a sort of investment guidance or whatever, but it's more sort of like a few ideas that we threw at the beginning of the year that people can look at it and can debate about it, can think about it. At the end of the year, we come back and review to say that whether they make sense. And my thinking on this topic has evolved. How are the various sectors in tech that we are watching became different throughout the year? So that's the purpose of this exercise. So we issued the predictions for this year, and some people are already complaining, saying that there's no specific one like we did last year, like on target price, etc. But we feel that 2022 is probably of less uncertainty compared to 2021. I think we all see that COVID is probably going to end in one way or another, and the different sectors in Southeast Asia which are raising capital. You can pretty much sort of predict how it will go, right? All the major players would go into groceries. I think Grab's already doing that. Foodpanda is doing that big time. Lineman is doing that. Shopping, no exception. I don't think they can let groceries be taken by somebody else. So, some of the company will go for IPO, and I think most of the companies going for IPO this year will probably see their price slide, because we have all seen the valuations in this region, and whether that makes sense or not. So basically a set of like ideas that we throw out, and hopefully can stir some debate. So you can go to our blog.
Jianggan, I have a question for you.
Yeah.
What do you think about 15-minute deliveries? Do you think they will flop, or do you think they will succeed? Because there's been a huge burst of them, right?
Yeah. So even in Singapore, I see a few companies being funded and by executives of large tech companies building sort of instant delivery business models. I think the former MD of Lalamove in Singapore now is doing one, funded by a few European investors, etc. I think Happy Fresh is back alive. Grab and Foodpanda are investing big, and they go across the globe, right? You see Joker, etc., etc. So there's lots of buzz there. Whether the business model makes sense, I would say that, I mean, in calculation, it can probably make sense, but it's a game of execution. It's a game where you need volume, you need density, you need huge operational efficiency to make it work, and also you need to look at competitive landscape. So the few players from China, I think Mrs. Fresh and Kindle myself, which are both publicly listed now, so you can check out their financials. They are facing a very competitive market in China, where every big player wants a piece of the grocery fulfillment in one way or another. So I'm not sure whether that's entirely representative of what other markets will see, because so far I haven't seen any market as competitive as China. So that's a question. Volume and density, you can probably do some projections, you can probably do some simulations, and whether enough number of customers will order from you on a regular basis. That's something that you don't really know, right? I mean, unless you try it out, unless you make constant improvements, unless you sort of increase your penetration, build better your services. But the operational efficiency, this is something that I think is achievable. I have seen lots of very detailed on-the-ground research about what Meituan is doing in each locality and how they optimize the metrics of each operational area, and eventually achieve a tiny profit for what they're doing. But by doing that, they build a moat that's very, very hard for others to catch up with. So with all the startups which are running towards that, will they achieve that? I don't know. But I think at the moment it's probably not the top priority because it's land grab. And I would see that I mean, some of the big players will probably be out there to acquire some of these startups if they don't become too expensive. So I think that the game is being played out. Eventually, I think the demand will be there. And how big the demand is very hard to predict.
Andrew, what do you think?
I predict that it's going to be rough. And the reason is, I think most of these 15-minute delivery startups have been tangent on a few things, right? One is they're trying to get locations that are distressed assets because of the pandemic. They had to close down, and so they were able to get very cheap assets. So basically, the pandemic allowed several very unique circumstances to exist for certain tech startups to be able to have unit economics that don't make any sense, right? So take for example, 15-minute deliveries. They were able to get very cheap locations and obviously like 2-year contracts to rent these places out, and then be able to build out the density. And because a lot of more people were working from home and were willing to do groceries and didn't want to go out because of the pandemic, because of COVID, they weren't going out to meet friends at bars. So it made sense to not do groceries on the way back home from work or from the bar, from wherever you are, right? As a result, these businesses were able to thrive. Now, what happens is, I do believe that the future of work is happening, but I think it's not going to happen across the board, right? Like the tech industry, usually is ahead. If you work at a lab, you got to go back to the lab. Right? If you work in an office and it's a pretty strict environment where mostly it's boomers running the show, you're going to go back to work. So in majority of businesses where things are going to go back to normal, the unit economics on both sides of demand and supply are going to stop making sense, right? And so I think this is one of those industries that's going to get hard. I think a lot of them, like Joker raising their $1 billion, like a lot of them, like building that war chest was important, but whether they can make those unit economics work, I think they'll succeed. I just don't think they're going to get ridiculous decacorn valuations as fast as they think they will, right? And some of them will definitely flop. I can't say who. But there's also other industries that have been growing off the bloom of e-commerce, right? So revenue-based financing has blown up all across. That's one thing I've noticed in Europe, in LATAM, and in the US, right? All these new financing models that create lending and fintech opportunities for e-commerce entrepreneurs. So if you look at a lot of new banks that have been created that support digital entrepreneurs, a lot of that demand and the risk models that they built can be called into question when that digital purchasing power decreases, right? So that's another industry that for me is like up. So I think that we're going to see some massive flops. I can't say who, but yeah, we'll definitely see them.
I think one thing we look at the grocery delivery, at least from China's point of view, right? We don't look at what am I going to make this business model? I mean, this business model eventually has to be self-sustaining, but people are looking at if you build this fulfillment network, what can you build on top of that? So one conventional wisdom is that if you have this instant fulfillment network, you can disrupt e-commerce. But so far, I mean, if you look at even what Meituan is doing, their instant delivery or quick commerce, whatever you call it, they're still largely focused on grocery. And the categories and sectors beyond that, I mean, of course, they've been selling iPhones, maybe one of them is small, whatever. But the categories beyond that has been very, very, very small. So will they be able to leverage this instant delivery infrastructure? Let's say if they manage to bring that infrastructure to a break-even point, to fulfill other things, to increase the profit margin. That's a question mark. That's something I don't think anybody has figured out yet.
Yeah, I think China is very different in this kind of respect, in that maybe I don't know. My intuition tells me it might work better in China because they have a different kind of demand and problem that you're actually creating value to a pain point in China. But like in other markets, I don't know what that looks like. So to me, it seems very shaky. And I think Andrew hits a point on the head that things are changing when you go back to return, to post-COVID. And along that vein, I think, a lot of people who jumped on the fad of cloud kitchens, a lot of those guys are going to flop and crush. Just think about your food ordering and wherever you are around the world. I don't know, for me, the cloud kitchen experience has been horrible and disgusting. I mostly will order from fast food that's well established, McDonald's or KFC or something on these platforms. Very, very rarely am I very happy with some cloud kitchen or any other restaurant, unless they have productized transactional food really well, that you're just looking for something quick and easy, right? So I think along that vein of returning back to norm, I think a lot of these players are going to die out. They were just never making a good product to begin with. There are certain ones that will survive because they are inherently very good, and someone can solve that. But I don't know. That's what I think.
I just want to disagree. I think dark kitchens, just my experience in London and in Barcelona, I think they're going to kill it in super dense cities. There are some cities where the model of having multiple stores operating out of a single location, they're freeze drying food and then they're refreshing it when they deliver it. I think that model where you basically, think about Asia, right? You can make fried chicken, coated with 3 different sauces, and it could be Indian fried chicken, Korean fried chicken, or Kentucky fried chicken.
Yeah.
You know what I mean? And today, and you take certain cities where people just like fried chicken, but just like 3 different varieties of it. You slap a different label on it. It comes from the same store. That dark kitchen is winning it. So I do think I think that model may have some. Look at Travis's company, for example. Sorry, Travis Kalak's company. They're completely killing it, and there's a few others that are entering Southeast Asia as well that I think will have a pretty decent business model. That one I think.
Let me add a point here. So we are actually in the process of finalizing our updated version of our food delivery platforms in Southeast Asia report, which will be published before end of January. So we actually examined the cloud kitchen models across the region. General sense. Many of those which are actually run by restaurant groups are actually doing well. These are the guys who know how to deliver good quality food. And the ones which are operated by platforms, some of them are doing well, some of them are not doing well. I think depending on which executive is actually in charge of it. But many of those which are run by third parties which basically have access to, as Andrew said, low-cost real estate. They want to convert that into cloud kitchen, but do not have the expertise to run cloud kitchen operation. Many of them are not doing well because restaurants looking at this saying that why would I pay for this? Why I can lend space from my friends' restaurants, or I can build. Restaurant, in the case of restaurant groups, I can build on my own because I also have access to low-cost real estate. So I think many of the real estate players we see in Southeast Asia are not really doing well. But those people who have the ability to deliver culinary products and have the experience to run restaurants, I think
Okay, great. Dave, anything for your end? You seeing anything for this coming year or any changes?
I mean, just to quickly finish up this point on like the online grocery thing, I feel like this is like what the third iteration, same industry, right? Like we, early internet, we had like what was that company like groceries.com, which was like one of the largest internet busts. Like they literally raised, I think, like one of the biggest rounds, and then like immediately afterwards, the entire market crashed, right? And then we had this second round, which was like maybe let's say like when Happy Fresh started, which was like
Instacart.
maybe 8 years, Instacart that round, and now we're like on the third iteration of this. And I feel like my personal take is like it's sort of like the same story, and people keep trying to make it work, but I feel like they never truly crack the fundamental of it, which is like I think this model only works if it's a part of a larger platform or ecosystem or
Amazon.
Like, yeah, right. I think like maybe one of the reasons like China makes more sense is because China is for the most part a very consolidated ecosystem where there's like a few large players and then everyone buys from those few large players and their digital services on top of that. So it doesn't matter if your online grocery doesn't make any money because you have like payments and you have regular e-commerce, food delivery, and booking and all that stuff, right? And sort of these standalone. So for me, like groceries is like they're almost like the canary in the coal mine. Whenever someone tells me that they want to do like a standalone grocery play again, that's always for me is like, okay, this is kind of a sign that there's a bunch of liquidity in the market and it's super fun. And no, I'm serious, right?
That's true. That's true.
Think, like fundamentally, the unit economics business never works as a standalone play, right? Because like groceries, as we all know, is like notoriously the lowest margin of all retail already. It's like a regular grocery store runs like 1% to 2% margins, and that's like a high performing grocery store. We're gonna talk Whole Foods. And so then when you take that and you try to move that into like online, and you also don't actually really fundamentally fix any true pain points, in my opinion, right? Like, I mean,
inventory management stuff.
Yeah, exactly, right. It's like it's almost it's like capital looking for a problem as opposed to like actually deploying capital to fix an actual problem, right? So I'm generally speaking quite bearish on these things. I think, and same with the cloud kitchen, right? I think these plays make sense if it's part of a larger ecosystem. Like if you're already like a restaurant operator and you deploy cloud kitchen on top of that, but like a standalone businesses, I have never been really high conviction on the sector, and I think this sort of ties into like a broader theory or broader prediction that I have. Maybe it's a bit broad. I'm looking at sort of the markets on macro level, and I think we're going to start to see a liquidity crunch coming probably towards the end of this year, right? You already see it to a certain extent. Like the Fed has basically announced that they're going to end tapering by March of this year, which means they're going to stop buying assets. They're also going to start raising interest rates. I think they've announced that they have 2 planned interest rates this year, right? So I think what that's going to do is it's going to have knock-on effects on private markets. And then a lot of these businesses that were started in this really, really frothy environment, basically, if you raise, this is probably the best time to raise. You try to raise again in like say 8 months, and it'll be very, very difficult for a lot of these players that have poor unit economics, because ultimately what's going to happen is people are going to become, there's going to be a reconciliation between your fundamentals and your valuations. And then sort of like on top of that, whenever this happens, what happens is always like the rich will get richer. So the best companies, the biggest companies, the ones that have the most scale, they'll still be able to raise capital, right? Because people still, the asset class will still exist and they'll still deploy in the best companies. But then a lot of like smaller standalone plays that had weak fundamentals, they are going to have to go into probably a profitability mode type scenario, and then ultimately the best ones in that lower subset will probably be acquired by the biggest players in the ecosystem.
Yeah.
So that's like my prediction for this.
Yeah, and if interest rates, well, depending on the timing, will be very interesting. I think. I think the tapering goes hand in hand of interest rates being raised. They affect each other. So, and then what's more interesting is that if supply chain has not been able to sort itself out, like we've been seeing across the world, the supply chain has been shocked, and if that doesn't get sorted out before that happens, it's going to be very, very interesting, because effectively when interest rates go up, the dollar correlates to being stronger, and that's very good for export-oriented economies. But like if these countries are still having supply chain problems, you're going to have this very interesting disjoint between growth of countries and rates being raised. So it might not have this. It might cause more friction in the global markets. I think if depending how it plays out, like I don't know if supply chains are going to improve in the next 6 months or earlier. I think it's going to take longer, because we're talking about 2 years of basically unwinding that, and then I don't know, it depends if things decouple further or not, but it's a very uncertain time, I think. So and like Dave astutely points out, that may change things. It does segue nicely to the next section of how investments is changing. If macro changes, I think for the big LPs, they have been the biggest beneficiary of quantitative easing. Whenever you want to increase money supply, the Fed just dumps money into these accounts of the largest financial institutions, which are banks or big investment companies who actually have the treasuries, right? And so those guys then loan out money, and they have too much money to allocate, which then squeezes into VC, right? So, if that changes, we're going to see probably risk off and then less allocations only to the best investors, right? Like the Sequoias and stuff will keep raising probably, but we're going to see a crunch further down. And then, I think, it's like Dave said, you should be raising now to take advantage of that. And we're seeing that, like with the article that Jianggan shared about Y Combinator, they've raised the amount of seed round. And I think that across the board globally, they're investing globally. So everywhere, seed rounds increase, which we've talked about in other episodes. So, think things are changing from the macro picture, but they do affect all the way down to what we see in the investment world on early stage and, Series A and up, I guess. So I don't know. What do you guys think?
I think many of the VCs at this in this region, many of the so-called top VCs have secured very, very large next funds, and we're seeing fund sizes of 500 million, and these guys will probably need to deploy all this capital in the next 3 years, 2 to 3 years. So I would see that seed, Series A, and etc. would remain hot for this region. And also I think that there will be a bigger supply of entrepreneurs. Not rather public. I think I know a bunch of people at C Group who are looking to come on and do their own thing. So you have founders, you have the capital, and you have the infrastructure. Payment is pretty smooth in many places, and logistics is there. So there are business models we can build on top of that. So and when we look at Series A investors, they think about exit in 5-7 years horizon. Would 5-7 years later become something like 2020, the second half of 2020? That's something that people are betting on. So I think I agree with you. Some of the new funds might find it hard to raise money, but for the funds which have the money, which have the existing money, okay, think about a few years down the road, they are probably going to be very bullish in deploying that money.
Yeah. And I think that ties back
I think that welcome.
Go ahead, Andrew.
Sorry, go ahead, Alex. So
No,
I was just thinking, I think the two interesting trends that are going to happen in terms of fundraising and investing is one. If you look at how Y Combinator is doing it, basically what they've done is technically a seed fund as a tack on to their pre-seed fund, because not everyone's going to get the 500K, right? It's an additional allocation if the startup meets the requirements and they pass through the IC. So technically they're doing what everyone else is doing, which is you realize after a while that you need to prorate and have a significant percentage of the company if you know it's a winning bet. And they've been proven, at least the last year, because they've had a bunch of IPOs. The market is saying that Y Combinator knows what they're doing. Y Combinator has become a brand that has become exclusive enough that a lot of founders want to have the YC stamp. The network that it unlocks is incredible. And so as a result, they're just banking on them having this incredible funnel, top of the funnel, that is going to open them up to so many entrepreneurs. And then therefore, why not prorate and continue, right? I think the more interesting question, and so if you ask me, do I think fund ticket sizes are going to go up? They're going to go up across the board. Every fund is going to have a follow-on fund, and you'll see a ton of that. That's not really going to change. I think the more important question to ask is, will we see more of Sequoia's model, the fund in perpetuity, which they launched in developed markets, but not in developing markets yet? So the way that works is they're going to run it more like a family fund. So instead of having a 10-year end, they basically own that company in perpetuity, and LPs can dip in and out if they want to, right? That theoretically unlocks way more capital for them, but it allows them to therefore capitalize on continuing to hold public equities once companies go public and continue to earn from that. I think we may see, and this may be a prediction, the first of its kind of that kind of fund in Southeast Asia, because no one's doing that in Southeast Asia yet, and it'll probably happen in 2022, and probably will start the chain for more funds to do that. And the reason why I say that is, if you think of the largest LPs in Southeast Asia, it's family offices and these big conglomerate families who are funding a lot of these funds, right? Sure, there's external LPs, but if we look at Asia, it's fundamentally family offices and larger conglomerates who have a risk, like high risk appetite, and they've already been doing perpetual funds. They just haven't been doing it in the VC model. So you're marrying an existing Asian concept of family offices with the VC model to this new perpetual fund model that Sequoia is running. So I think we'll see the first few of its kind in Asia in the next few months.
I mean, the interesting thing is, like, it's touted as this big innovation, but honestly, it's structured closer to a hedge fund. They have more public exposure, and they have the same mechanics, like a watermark of sorts, and a benchmark. Actually, well, they call it a benchmark, right? So they have a benchmark where they have to perform, and it's just essentially they look more flexible now, and they have more opportunity for longer term value to capture that. But it's essentially structured like a hedge fund, right? And I think that's just, over time they've gotten so big that they can do that, right? So, and I think it makes sense, giving more flexibility, more optionality for their investors. Whether they need to redeem some to maintain, I don't know, whatever the LPs are doing in terms of pension funds or whatever, right? Or endowments to fund for students, right? So I think it's an interesting prediction. And I don't know, maybe that's something we all can look at too. Dave, do you have anything to add for how anything's going to change?
Dave is starting his own family office, permanent capital. I said Dave is starting his own family office, permanent capital.
Yes.
Yeah.
Correct.
I think there's going. So I do have some additional thoughts on like predictions, but they're more like really macro stuff. Like I think like there's going to be actually an increase in competition in the region. I think sort of like in what I'm saying is, like, look at what's happening in like U.S.-China relationships. They're like basically continue to bifurcate, and there's a clear trajectory of decoupling that's happening at this point, right? And I think the more that happens, the more both those countries will look at Southeast Asia as like a key strategic area for them to both invest, like hard power and soft power. So I do think that like we're going to see more activity from a geopolitical point of view from both countries as they start to sort of like shift their focus towards competition of like building out like a framework of allies in the region. But that's like really generic, right?
Yeah. Well, I mean, if that's the case, there's definitely, in my opinion, more conflict to happen. I mean, I think we're in a very interesting transitory phase of society shifting and empire shifting. So, I mean, I don't know. It's going to be an interesting time in the next decade. I think will be very fascinating of where we land. So, any closing thoughts then, or is there anything else you want to add on, or are we good?
I'm okay. Alex, I need to leave now. I have a doctor's appointment, but
okay.
But before I leave, I just want to do one point, which is the news that came up yesterday, which I think is extremely shocking, that the whole of 2021, the population of China grew by 500,000.
Oh, really?
I don't think that's shocking.
Wow.
But I don't.
Well, yeah.
I mean,
They've been on decline for years.
That's not shocking. But the scale.
Who are these babies?
I think the scale of the decline and the speed is still pretty impressive, and I think the government has a huge task to turn this around. And if they don't manage to turn it around, there will be lots of consequences on businesses, on economy, on geopolitics. So something
I don't think
they,
I don't think they can. I don't think they can. I think it's too late, right?
Yeah.
Because I've read the same report where basically the demographic, I think your population is expected to decline midway this decade. Like by 2025, it will be in like permanent population decline, right? And usually how like countries address this kind of
like
thing
Japan.
is, basically like Japan, right? And
Which is interesting because they haven't escaped middle income yet, right? So typically you modernize fully and then you start to decline, but they're not even there yet.
No, but one-child policy does that to you. Sorry, Jianggan, did you say they had 500, like 500,000 extra babies? No, I didn't. I think I misunderstood you.
No, the total population growth, which means the total birth minus total death, is about 500,000.
Yeah, that's nothing.
Is plus 500,000 or minus 500,000?
Plus.
That's
is very
weird.
small.
No, they should be on negative. They should be
No.
negative.
Their population growth is supposed to. It's predicted to peak in like 2025 and then just decline from there on. But
Gotcha.
half a billion
Okay, so
in a
2025 was
country.
the turning point.
Yeah, basically, like
And
half a
it was
billion.
3 years in advance.
Yeah, but like this is like the problem, right?
Honestly, is that the worst thing? We're just going to have more supply than demand globally, which means we'll have a post-scarcity economy before we know it, right?
Well, I mean, I think the problem
It's not
here.
exactly like, yeah.
Oh, go ahead. No, go ahead.
So just like,
I think real fast. See you guys.
Bye, Jianggan.
Thanks,
Yeah.
Jiang.
Bye, Jianggan.
Thanks, Jianggan.
We can-
Bye. Yeah. I guess, for me, it's like most of modern economy is based on this idea of growth at all costs, consumption and production. And we're going to start to see the beginnings of a new kind of economy, right? Because the Western world is already in terms of population decline, which means consumption is reducing and production will therefore reduce in terms of material products, but services may increase. And we may see the way these goods get distributed start to change. If you look at the UN's prediction for global population, we're supposed to hit a maximum of 11 billion before the reversal starts, the great reversal starts in 2050. And it's going to be fascinating to watch what happens then, because all of this time we've been depending on humans to be the consumers and producers. But now we're going to have automation starting to take over some of that production. We're going to have cheaper energy. I mean, like if you project like PV prices up, like if you think about it, right, most products have 4 fundamental things to them. There's the raw materials, there's the transportation, there's the energy cost of it, and the labor cost that gets into it, right? And what's happening now is energy costs will start to reverse in about 20 years' time as like renewables become super cheap, right? Then you have labor itself that starts to become cheaper and cheaper because of AI, robotics, and automation. And then you basically have all you have left, and then transportation, which is somewhat tied to energies and automation, which then starts to reduce. And so when these 3 things start to get down, all you have is raw materials, which means that if you're, a producer, it's going to be, like either things get cheaper or capitalists take more money. It's hard to say where it goes. I'm going to bet on the latter because that's exactly how we've seen late-stage capitalism work. But then on the flip side of that is you have a ridiculous reduction in demand, right? Which means suddenly things like land become abundant. Things that we used to think of as scarce products and its growth in terms of price was completely dependent on its scarcity. These things may start to reverse. And it's kind of cool to see China, which is a emerging economy, maybe one of the first experiments in emerging economies with a centralized control being able to figure out how to balance that demand and supply bridge, right? I'm not sure how it's going to work on, but I actually think there's a positive spin here, which is less people with more goods. Probably not the worst thing.
Oh, well, I was just thinking that to navigate that change, you would need the people to do it. And if the deceleration is too much, so essentially China has a social contract where as long as there's economic prosperity, the people are willing to give up control in certain areas of their lives, right? So that social contract is very delicate. And as soon as the machine stops working, there's going to be turmoil in the country. And you saw signs of this when a lot of people couldn't go home for like the Chinese New Year, and like things are getting too expensive to go back to the rural. I mean, it's a very delicate transition that needs to happen. But in order for that transition to happen, you will need to have a sustained population growing to keep reinvesting in the high skill knowledge to make that transfer. So it's not as clear cut. I think ultimately if they can make that transition, you're right, Andrew. But I don't know if that's going to be the case really.
Well, I think Andrew's point was like more of like a global macro point, and I think my point to you, Andrew, is I think the demand will never go down. It will just shift into different categories, right? So if you think about it, like as their population gets like, okay, if I'm saying anything about China, as their population gets older, right, they're going to probably want less iPhones, but like the demand for things like hospice care, retirement centers, like medication, so they'll just shift into different categories, right? And I think the challenge vis-a-vis China specifically is like, if you think about like basically how they've driven their growth for the last, 50, 60 years, basically it was the low-hanging fruit, right? They took their like really rural population and they've industrialized and they've urbanized and they moved into the coast. And so they sort of like took down that very lowest level of value creation by basically just industrializing and becoming a capitalist society. But then as we like get to the next layer, but then really what we're talking about is they need to drive their growth via services, via innovation, via technology. That's much harder to do. And I think and this is what we talked about, I think their crackdown in the last 1 to 2 years will have some significant effects, right? There's always second and third order consequences to the things that are done by any government, no matter how competent they are. I mean, one child policy, this is like the one child policy coming home to roost, right? Like 30, 40 years ago, it seemed like a great idea. And now they're like, oh, crap. And so I think, I read an article that was analyzing sort of the government policies. And I think the fundamental challenge of this government policy is like the Chinese crackdowns have been both capricious and really, really severe. And if it was just one or the other, I think people would have been able to deal with it, or entrepreneurs and innovators would deal with it. But now, because it's both, I think that's going to have some severe consequences in sort of like their rates of entrepreneurial participation. I don't think you can top-down engineer and force people to do things that you want to do. I think that is an exercise in hubris, and I think that's been proven many, many times in the past by top-down economies to not work, and that's really kind of
the USSR.
Yeah, I mean that's what they're doing again. They're basically forcing people to go into like not forcing, but they're like really, really pushing for like hard sciences, semiconductors, like high-end manufacturing, and trying to get people away from sort of like the more like this you call like frivolous areas of tech, like the gaming, the social apps. And I think you can do it to a certain extent, but ultimately human nature is what it is. And I think like trying to force people to do that without the natural buy-in is not going to be that successful.
Okay. So
anyway.
I guess we could probably end it here, guys, right? I think we covered most of the topics.
Yeah,
sounds good.
Sounds good.
We're also a bit over time.
Yeah.
Yep. Okay. Well, it's good to see you, Andrew. You're looking healthy in Mexico, enjoying the life.